All right, welcome back, bitches. All right, this is going to be pre-market analysis. So the first step that I'm going to do is to identify a strong level of resistance or support on the weekly. As we can see here, we have a bullish candle and a bearish candle with no tails. So for me, this is a very strong price indicating that it may come and retest those levels again and respect it. On the daily, actually. Okay, the second step I'm going to do is since previous week candle closure is bearish, I'm gonna use the Fibonacci's from the high to the low, and on the negative 27 plus numbers theory, which is 200, is going to give me my target, right? These targets signify a potential pullback. Okay, meaning that if the market decides to go up, this is the next target, the market to fail. Yeah. So we can see that this bearish candle failed to retest the key level. So if the market start pulling back, this means that the market is going to, whenever the market comes back to the key level, is gonna break it. So we still have momentum to the downside that we can use. So that's it for the weekly. For the daily, I'm going to grab my Fibonacci's from point A to point B, which is to the low to the high, because we are on a bullish trend. And as we can see clearly that we have key level, we have call direction, and we have our target level, indicating that at this price here, the market may react, right? So we know that for a fact. Okay, what else do we have here? That's what we have. So on the 4-hour time frame, we can clearly see to the left, we have nothing that we can use. We know that the market is clearly, oh, look at this. So this is a bearish candle aiming higher, creating this. So we know that the market shifted from this point. See, skyrocket. And in that push to the upside, the market left a trail of volume that has not been on top, hasn't been on top. And if you look left, we also know that this is where the market is, this price. So if I extend this to my left, because remember the first price I want the market to fulfill is the price that led the entire move. Just this one. Okay. Delete this. I'm going to call this buyer's volume. So now we have a lot of confirmation that this is where the match is going to happen. And all these levels, they require closures, candle closures, candle closures. So for price to be able to continue to the downside, it needs to close below these 3 levels. See how crazy this mouth has to be? So we know if at the beginning of the week, we may see a pullback. If this happens, we know that over here we're gonna be willing to buy to the upside. That's the idea there. So, and also, let me see, I got to find structure here. So we have break here, the market from this high to this low. So let me see. We also have to count this low. Did it break structure? It has not broken structure. Can you believe that? This is going to be 100% retracement. That adds more. And then we have one low, two low, three lows. Right? So this is the fifth low that's going to create. So if we use the Elliott wave, we have 1, 2, 3, 4, and the fifth wave. Got 1, 2, 3, 4. Is it 1 wave, 2 waves, 3 waves? Is it 1, 2, 3, 4? No. It's 1, 2, 3. Four. And the fifth wave. So what's going to happen on the fifth wave? Let's see. I want to validate this a little bit more. Let me see. From this point to this point. And if I do the pullback target, this is the pullback target. Look at that. 1 pip. 2.2. Wow. Okay. 2.2. This is 78.6. I'm probably gonna change these numbers here. I'll do that later. So if we track the fibs from the low to the high, we can see that the market is reaching the 50% and it's 61.9. Right? And it breaking the 78.6 now. So the market has cleared all the orders here. And we know that if the market continues to the upside, this is what's going to happen here. This is the pullback happening. So we know that already. I don't need this anymore. Let's see if we grab from this high. From this high. Here. You also see that over here is making sense too, right? Good. I don't need this anymore. I don't need this anymore. And I don't need this anymore. So now this is what I have, right? Fibonacci from this point to this point. All right, this entire area is where the market is. But I still can find a good price to enter. So what I'm gonna do here and to play it safe, because I do want to be in this trade, what I'm gonna do, I'm gonna place a buy at 255. 2 plus 3 pips, 35. I'm gonna do 55. That 5 pips, and on this one I am gonna have my stop loss of 30. But this is 255 and it's 30. Is it? No, I think it's, yeah, it's good. It's 950. That's it. It's good. 950 is good. 30 pips. But also have to be aware of this price. So this is a very tricky one. You know what I'm gonna do? I'm gonna wait for the market to come back. Okay, let me see. Validating this point a little bit more. Oh yes, okay. This is gonna be our entry. See, Jesus Christ, this is good. So to find the right price, this is what I'm going to do. Right, I'm gonna go to 500 and I'm gonna go to 79.800. See, it covers my entire range. And I'm gonna go 1, 2, 3, 4, 5 and see where I get my closures. I'm gonna use the daily for this one so I can find a strong price. Okay. I just had a deja vu. So I'm gonna do this and I'm gonna call it black. I want it thin. I want it accurate. Let me see. Now I'm gonna look in the past. Okay. What happened whenever that price reach? Oh, look at that. We have a better price here. See that? This is the price that we're going to use. And it is 942. So $942, and let's see how it looks with the candles. Yep, everybody's willing to buy a 942. Now go to my H4 time frames. And I'm going to use this price, 942. 942, I'm going to 5. 955. This is where I want my entry to be. Everything's validating that price. So why am I doing yellow? Because this is where it needs to be. I don't need this, I don't need this. I have all my confirmation happening already. I don't need this anymore. So now I have a price that I can use. Because also I don't want to guess. $9.55. And I'm gonna have, let me see, $9.55. That's 15. That's an empty. I'm gonna do 650. I'm gonna do 650. I shouldn't do too much. 650. $81.7. 81. Okay. Yeah, I'm gonna go from there. So let me see. I don't want it to be 100. 79. 79.96. No, my entry is 55. That's going to be my entry. And I'm going to do 650 as my stop loss, 30 pips. But usually I know that 25 is a good number. But this time, this is what I'm going to use. 30 pips stop loss. And, I'm going to get a huge reward out of this one. For sure. That's if it goes down. So 1 to 10. Interesting. Okay, now let's identify the pullback, right? Now that we have identified a price where we might want to buy if the market pushes to the downside, now I need to see if the market pulls back. Instead, where we would like to sell for the market to push to the downside, right? So let's do that now, and let me remove this. If I grab Fibonacci from the high to the low, the 78 from the daily, it is sitting at a right 78 as well, right? So over here, we can see that the market has been here and the 50%, that's a strong level. And we have this weekly level too. So this also confirms us that this is where the market is at right now. This is quantum mine level. So we have this 50% as our main. And then the 50%, let me see, Fibonacci of the 50%. $100. So this is 50%. Okay, now we have confluences here. We have one, we have the 50%, we have this level, and we have the weekly three potentials confluences. This is measured because this is where the market is, and this is where the market wants to trade. And this is where the market took up the buyers for the seller to come in, right? So over here, we do have, you know, the kind of this level as well. So this increases probabilities. So if I want to sell, let me see, where is the Fibonacci's here? Right, this is good. We have one candle here, take and take. Too slow. More probabilities to the price. So this is what I want to happen, right? Since we are still on a bearish trend, like that. Let's see. I want to sell at this price, 55.5. On this one, yes, I'm going to enter a 55.5 entry, right? Because this is the weekly. 55.5. It's too high, so I'm gonna use the price that I have here. The average of this price, 525. 525. This is where I'm entering. And of course, on this one, I do not need too much of a stop loss. So this 525 for those 650. 650. How does that look? The stop loss 6 actually is stop is 5. So I'm going up. I have to fix this. Okay, 25 pips. We'll put 750. I'll put this at 30. Yeah, 25. Might throw an extra bomb. 50. 35. You know, I know that my stop loss is protecting me from all kinds of shit, and it is at the high too. So let's see. So now we have two potential probabilities for the market to do, right? Which one's going to happen? I am not too sure yet until the market reaches the level that I want. Now, I am going to be having a sell position here, right? If the market push first to the upside. But if the market pushes to the other way first, here, I'm going to have a position here to look for a buy. All right. So So that's it. That's the analysis for GBP Japanese yen. Yeah, and this is going to be a 1 to 10. All of them are high risk to reward potential. Can't wait to see what's gonna happen. Can't wait to see. All right, this is it. And bye for now.